Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, with Shaun Burgess, Portfolio Market Strategist Extraordinaire. It's September 19th, right after the close. Well, everyone was waiting for that for the Fed announcement and news and commentary this week. I don't know that we were much. You've kind of saw the markets trade into that Wednesday announcement. How about post-announcement? What have you seen?
A little bit of weakness. You had markets really front run the Fed, really putting a lot into expectation-wise, multiple cuts. This week you had two things kind of working against that. You had retail sales come out, which was really particularly strong. So it really shows you the consumers out there spending. Not a great sign for a weakening economy, or the weakness you'd want to see if you're on the bandwagon for more cuts. And Powell's commentary after the announcement really said as much, right? There is some weakness on the job side, but they're really worried more about inflation. And if you look at those retail sales numbers, that's not going to be helpful towards seeing that kind of trend down. So they're going to be really data dependent going forward. Markets, had priced a lot in coming into this.
Sure had.
There was a lot of expectation for not only this cut, one or two to follow. You saw some repricing of that this week, but we've come a long way. If you look at where we were just at the beginning of the month, you've come all the way down from, somewhere around a 423, 424 on the 10-year, down to below a 4%. We broke 4% for a little bit.
I didn't see that.
We broke 4% just through for a very short period of time. You had some give up from there, and we've lost a little bit on the week, but we're a whole lot better than where we were if you look back a couple months from where we were.
Yeah.
Munis, much better picture there.
Much better.
Yeah, much better picture. They were actually lower in yield, saw some continuation of the strength we had talked about. Another good week for inflows, had about $1 billion in inflows, so that helps support the municipal space. And, I think people are really looking at the relative value you can get out, especially on the longer end. We talked about it. We like the longer end in particular. We think you get some real good value there, so that's kind of where we were looking.
Good. Shaun brings up a synopsis of the news, and that's a little bit what I want to discuss. We'll keep the video fairly short. Equities were very strong this week, so that's just fine. I want to talk a little bit about that reaction to the news and what's important to keep in your mind in terms of being an investor and a trader. And that is, the news and what happens after the news are two different things. Headlines and market reaction are two different things. Commentaries, talking heads as they're known on the financial shows, they're on there for a reason. It's either, number one, to raise AUM, to get money sent in, or to sell a newsletter, or any number of things. It's very important to understand what your goals and objectives are for your own situation. So I often say we're going to trade what's in front of us. We're not going to look too far beyond the headlights. We're going to try not to get over our skis. We're still in that type of scenario. We're going to take it week by week, month by month. We're invested in the right sectors. We're invested in the right industries. Strategies are having very strong quarters. They've had strong years. What we try not to do is get caught up in what we think is going to happen 3 months from now and 6 months from now. I want to give a quote from he's a market writer, and he's really just a fantastic writer. His name is Morgan Housel. And he had a little quote. It came over X today, Financial X, and I had to laugh because it was so true, Shaun. It said, "The people who didn't see this coming are 100% confident about what happens next."
Great quote.
It's the same people that have been talking about 5.50 10-year yields, the economy falling apart, markets being overvalued. They've been talking about that not just for a few months, for a long time.
Seems like forever.
But specifically over, through the spring and summer. And boy, they're just doubling down. And the reason I mention that is not to tease or poke fun at these people. that is an impossible mental framework to make money. If you see somebody that just keeps doubling down on their prediction, ignoring markets, just make sure you never send them a nickel. You're going to be disappointed. And that may sound odd, but I just got a kick out of Morgan's little Twitter tweet today. There's one more. The Prime Minister of Israel, Shaun years ago. Many people know him. He had a fantastic quote, and I have that quote near my computer on a little sticky note, and it is, "Optimists and pessimists die the same way, but they live very different lives." And I keep that in mind because anything that's happening in the markets, there's two sides to that market. And it's never all bad, and it's never all good. Now, with the markets hitting new highs every day, you can think it's all good. You better be looking at some risk here. We're looking at risk. It's a high-class problem to have some securities doing very, very well. But if you're ignoring the fact that you have to still maintain a risk posture,
you have to have discipline. You have to remain disciplined.
So just a couple quotes to share with you on an otherwise solid week. We'll be back at it next Friday. Enjoy the weekend.